Hello and welcome. I'm in conversation with Mr. A Balasubramanian, the Chief Executive Officer of Birla Sun Life Asset Management, and we're here to talk about the upcoming union budget and what we can expect from that. Thank you for joining us, sir.
My pleasure.
So the last union budget had the government project about a 12% growth in its gross tax revenues. This time around, for the month of April 2016 till December, we have already seen a 22% growth in its gross tax revenues. Of course, when it comes to the non-tax revenues, they are still to catch up. But based on all this data, what is your expectation when it comes to the fiscal deficit for this year? And what are your projections when it comes to the fiscal deficit for the upcoming year?
I think clearly if you look at the roadmap in which I think the whole of last 2 years have been evolving. Right. Overall the direct tax collections have been on the rise. Right. I think that's also mainly on the back of one, the general compliance levels have been rising gradually. And second is the oil being so low, but the complete benefit was not passed on to the consumer at large, and the government also had saved some money in the form of tax collections. Right. And fourth, we also seen some kind of success in the previous year in divestment. This year, the demonetization impact and also the disclosure of income on 30th of September. And all of them together actually we have seen actually the tax collections rising. Right. But the fact of the matter is there has been a clear uptick that we are seeing in terms of tax collection trend. One of the bigger impact that we are seeing actually as we move forward is the impact of demonetizations. While it is a widely discussed subject in the country as a whole, but this is one of the area where we probably see an invisible kind of outcome that could come. Probably it's very difficult for us to put a number to it, or even very difficult to actually predict the number. Right. I think the bigger outcome of demonetizations could come effectively on the tax to GDP ratio collections. With one of the estimate that I had shared in the public in the past is around the number of the people who are filing tax return could go up by about 4 or 5 times. Right. If that number actually go up by 4 or 5 times, even if there is a marginal tax collection that comes from each of the individuals who are filing additional tax return, effectively your tax to GDP ratio from the direct tax collection also has to move up. The second impact again is very difficult to predict at this point of time in the short term. I think GST once it's implemented, then as you move forward, may not be in the first half of this financial year or maybe the calendar year. I think as time progresses in the year 2017-2018, we will also see actually the larger compliance coming from the large pool of trading community in the country, right, adhering to the GST as a tax regime. Therefore, combined if you see, I think the overall tax to GDP ratio numbers can only actually see an uptick. Right. And all of them actually we are counting that there is no immediate kick that will come actually in the overall economic growth. Right. So if that comes actually on the base of a good monsoon for next year and rural economy, which I think where the current focus has been there, if that picks up, then we will probably see an add-on benefit that comes to the overall the GDP growth moving up, on which I think nobody is currently at this point of time talking about it. Right. But these are some of the things which we do not know actually how it will play out.
Right. So it seems that for now you're accounting a growth in tax to GDP numbers, which also means that there will be better revenues for the government. But for this particular union budget, where do you think allocations will go? Because there is some noise that will go to the small and medium enterprises, of course to a certain extent infrastructure and agricultural space. Where according to you will you see that incremental revenue coming and being allocated to?
So I think the way we see is I don't think there will be any big change to the stated policy in the last few years, where the large pool of capital investment has been going towards the road, has been going towards railways in terms of building the right infrastructure. And third is around the Make in India theme, where you actually have schemes that revive actually the entire small scale industries in the country. And even the recent announcement of cutting the interest rates by giving a subvention for that segment of the market is also pretty large. Right. Therefore, I think that's where we will see a major allocations going. Having said that, there is one other sector which has also been identified is the housing as a sector, where there is a widely discussed subject about one sector that can actually employ large pool of people who are employable in the activities of the constructions is actually the housing. And housing is the sectors where the government actually is giving a push in terms of less than 20 lakh rupees housing schemes, which I think talking about it, the already dose of benefits have been given in the form of subvention, all put together, if you see actually that one sectors, if it gets revived, we'll probably see that focus I think coming. I think the budget will largely focus on how to actually create the employment in the country through these sectors which can actually employ large pool of people. That sector seems to be the housing as a sectors which I think has been identified as one of the sectors can consume large pool of people and create the economic growth as well.
Okay. And so what sort of influence will the upcoming state elections have on the union budget?
But from the union budget point of view, I don't think there will be any big impact. I think the natural is something which is budget is dealing from some of the state elections, and having said that, there has been a path which I think the last few years we have been following is on fiscal, keeping a very high focus on fiscal, keeping a very high focus on spending in the rural economy, and also keeping a very high focus in terms of public sector led growth, and the third of course as I mentioned about make some of the flagship scheme of the government to play its role of creating an impact in the broad economy as a whole.
Right.
So therefore, irrespective of whatever the state election that is envisaged in the month of February and March, I think the budget will largely address the macro need of the country, so to speak.
Okay. So we also are expecting the GST rollout in around the first week of July. What does that mean for indirect taxes in the interim right now?
See, indirect tax collections, it's the function of how the industrial production numbers are growing.
Right.
But again, if you look at the last 2-3 months, there are certain sectors where actually coming back, especially on earth moving equipments, we have seen some kind of uptick, and even the industrial activities in certain segment where we have seen some good uptick.
Right.
At the same time, we also seen actually some bit of slowdown in certain sectors, which is around the basic materials where we have seen some bit of slowdown. But again, it is more to do with the demonetizations and not to do actually the economic activities picking up. Even mining as an activities with the price rise that we have seen in the commodity prices globally for natural resources, we will probably see India being one of the resource country who have been catering to the needs of the global resource needs by catering to the export, by being one of the biggest exporter of the country. We will probably see, I think, the price stability that we are witnessing actually in the natural resources globally, including the metal space. We will probably see India also benefiting out of that. So, it is going to be some bit of mixed. And second is in terms of oil price, again being the significant contributor in the indirect tax collections, if the oil price, even if it stabilizes somewhere around 55 to 60 kind of dollar, there is going to be an add-on impact which is going to come from in the form of custom duty collections as well. Right. So, therefore, indirect tax collections at this point of time, though it has been pretty decent, I think the biggest component which I think will drive actually the excess duty collection, which is largely depending upon the Indian growth pattern that you are seeing it coming back, is something is I think it need to be keenly watched, and the impact of the demonetizations is how long is going to last in our view, maybe about next 1 or 2 quarters, and I think a lot of other variables start driving the economic growth. Right. With respect to the government push in terms of executions, and second is the monsoon led impact that could probably see revival coming in the monsoon in the rural sector. Sorry.
Right. So just a couple of more questions. You also said that you were expecting the tax to GDP ratio to move up. So do you have a quantum or any estimates by which you are working with right now?
There's no number per se, because again very difficult to put the number. I think we'll have to only see the trend actually. Are we in an uptick as far as the compliance? Right. Are we seeing actually are we going to see an uptick in terms of as a result of that tax collection numbers? Are we going to see actually the number which is somewhere around 14% of the GDP is the tax to GDP ratio? Right. Are we going to look at 14.5, 14.8 or 15? I think the trend is something is more important. Right. As long as the trend is good, which I think is going to be the case, then eventually I think we will probably see a better outcome of that. Okay. In the reflecting on the fiscal numbers.
Okay. So and finally, a $1 million question. Last budget, we saw the equity markets bottom out. The budget before that, we had actually seen the equity markets peak. What is it going to be from here on from the union budget this time?
Now, why this remains actually always a question mark. I think this time around, the impact for the union budget, in general, the expectations are not much. Right. And having said that, we also seen interest rates dropping quite significantly, and if the budget is good as per the expectations, with the way the interest rates are dropping, and then the earnings yield to the interest rates is now narrowing to close to about rather it become an attractive number. We will probably see the equity market reacting a little positively even post budget. That's my general assessment of the whole market.
Mr. Subramaniam, it was a pleasure talking to you. Thank you for joining us.